Hey everybody, how you doing? Welcome back to Go Be Trading. My name is Jose. It is the first time you join us. Thank you so much for being here. What I'm gonna try to do, as always, is break down some charts and see if we can find good opportunities in the market for this week. But today we're gonna do it a little bit different. We're gonna make a top-down analysis. We're gonna go from the higher time frame to lower time frame. We're gonna go from the daily chart to 4-hour chart to the hourly chart. We are gonna go lower than that because this is just for educational purpose, and for me, bring some ideas on lower time frame like the 15-minute, 5-minute, and 1-minute chart. It's like a signal service, and this is not a signal service. And at the moment you probably see this video, maybe those trades already perform. So let's go just for the higher time frame, the more medium time frame, like the hourly chart. So let's get into it pretty quick. What I'm gonna look first is the Euro USD on the daily chart. Let's take a look at this. As you can see, overall we are in a bearish trend. We're going down overall, but looking closer, we were being a little consolidation on this market, right on these channels, right here, and we can consider it right here. We pop up, but that was a false signal. We go down. We have a gotta move north. We didn't break a structure right down here. We break a structure, false signal again, and boom. The market just make a lower close to these levels, make outside return, and then break structure all those levels right here. So the market is telling me that there is the possibility to go lower. Where? Should be right down here. Should be. We don't know what's gonna happen, but there is that pretty good level that the market is probably want to retest. So we make our analysis on the daily chart. So let's go to a lower one. What we try to do here is, guys, I want to make this clear. Some traders make the decisions of if they want to go higher, bullish or bearish, depends on the trend on higher time frames. For example, if the market is bearish on the daily chart, they try to look for short opportunities in lower time frames. A lot of traders do that. I don't do that. I just trade what I see. But it's very common for some traders to do that. That's good. A lot of traders are successful with it. That's on the rules, and my rules they're not. I just trade what I see. If I see that bad pattern cipher, whatever it is that it tells me that go or short, no matter if the trend on higher time frames is the other direction, it doesn't matter. I just take it, and I've been pretty successful with it. So let's go to the 4-hour chart. Okay. Let's make our analysis once again here. As we saw in the daily chart, the market is bearish. As you can see, here's the same thing. The market break those structure right here. We're still bearish. Now, I have a little problem here, and I need your help. As you can see, we have a nice double bottom here. The market goes down here. RSI oversold. Retest this level. Let's make it a little bit bigger, as you can see it. We just retest this level. That's good. That's a double bottom. I trade double bottoms, but as my mentor said, look left. Structure leads clues. The market is not telling me that here is a potential. Here's another potential point that the market is likely to reverse. we are in the middle of nowhere. If you look further back, the levels that the market tells me that is really important, that is really powerful, are this one and this one, right? Those levels. So if I want to get short, long right now, maybe all my rules I need to wait the market to go down here, and that's gonna take a little while because this is a 4-hour chart, but we'll see what happens. So let's try to a lower time frame. Let's go to the 60-minute chart or the hour chart, whatever you want to call it. So let's see what you got here. As you can see, we have the same thing, try to see if we can go long. There's no structure on my left that tells me that this is a really returning point. Indeed, we had a thing it's called a kiss of death. We can see another opportunities right here, right on this in this time frame. Let's see what we got here. We got nothing. We had no pattern here. We don't even have a bad pattern. That's okay. But the markets on the higher time frame are bearish. So we can try to find some opportunities to go short on this time frame. What I can see is, looking at structure, we got this point looking for go short, and we got this point looking for go short. So we got this zone, and we can take this zone in consideration. So let's make some measurements. Let's take our Fibonacci retracement from this level right down to this level, and as you can see, pretty close to this level, we got a 382, right? Okay, we got number one. We got a little bit structure here with a 382. So let's make another Fibonacci retracement from here to here. We don't have really big structure. We're not exactly close to this 786, it's not even the 618 to this 382. That's okay. Let's make a Fibonacci extension. Hold on one second. Let's make a Fibonacci extension from here to here. Boom. Oh wow, look at this, guys. As you can see, we got a little Fibonacci confluence from the Fibonacci retracement to the Fibonacci extension, the 1,618 and the 382 to the Fibonacci retracement. This is a pretty nice setup here. Okay. So if you want to go short on this point, you're going to take a little bit of consideration where you place your stop and where you're going to place your targets. Your stop should be right up here. If you want to make an aggressive entry right here, let's make this in a little color to make this clear. Just give me a second. Right there is our potential kill zone. If you want to take short right here, an aggressive entry, looking the market to go up here, your stop should be right up here to have some protection. And your targets, I don't know, depends on your rules. For me, normally should be here and down here to retest those levels because I'm a counter entry. So you're gonna have this of risk. Let's take this on red because this risk. Oh, this is gonna be my first reward. All right. Okay. And my second reward is gonna be right down here. That's pretty good. If we copy and paste this, We got a number 1 here. Number 2, almost 2. We have a 2-to-1 risk reward ratio on our second target. If you take second target, or you just leave this first target and go right down to this level. That depends on your rules. But we can see another things here that is pretty interesting. If you feel that your risk is pretty big, looking for aggressive entry right here, you can do something to reduce your risk. If you delete this, you can look for a confirmation for a double bottom here and move. So because this is already on a structure with a double bottom, you can reduce your risk looking for gold down here. So your risk probably is gonna be something like this, right? And your reward is gonna be something like this. Okay. Do you see that, guys? Let's make the 1, 2. Oops. 3, 4, 5, 6. Whoa. 7 to 1. That means if you took that trade 7 times and you win on one of those ones, you're still on profit. You're still on profit, guys. So take that in consideration. Probably the market's gonna be higher. It's gonna make a double bottom. It goes down. Probably the market goes right, break that structure right here, do it the other way because we're on the bearish trend. Or you can wait. You can wait. The market may give you a signal to go short right on this zone. But remember, if the market break those levels to a higher high, higher close, that is I'm not considered to go short anymore. But now this is what I had on my radar. I just wait until the market does what it want to do. But here is what we have. So we made some analysis here. Depends on your rules, what you really want to do with it. That's all I had on my radar at this moment. Oh, sorry, I'm in a short position on the euro yen. That already happened. Nice cipher. My entry was right here. The market just pulled back a little bit, pull up. Really painful moment because that was a really strong move, but the market just stopped right at this level and bam, hitting my target 1 to 60 pips and looking for a target 2 to a 618 right down here for a move of, let's see, 104 pips plus 60 pips. Let's see what it happens. And that's it for today, guys. Hold on one second. That's it for today, guys. If you don't mind, please like, subscribe, and share this video. It will help me a lot. And please visit my website, gobetrading.weebly.com. This is a real good educational website with a lot of content. If you subscribe to my website, you're gonna have another educational material better than this one. So just for subscribe, go ahead, I'm gonna leave the link in the description below. Subscribe and you're gonna receive another nice free content. So that's it for today, guys. Good luck in the markets, and see you on the other side. Goodbye, guys.